Okay, yeah, no, sounds good. Thanks, Stu, and everybody just for the invite as well to come and run through these. As you would know, the measures that have been released by the government sort of keep changing every couple of days. So we've sort of tried in these slides here, which we've done a few days ago, but they captured most things, but there's been a couple of other changes since then. So we'll sort of try to cover those on as well. There's a bunch of stuff in here, which I can happy to pass on the actual slides as well, that you can pass around. But I won't necessarily go through it now because it's not so relevant to a lot of, startup tech companies, as opposed to other, SMEs. So we'll just pass over those. There's just a disclaimer. You can read that later. So the first one, which is pretty much the main incentive that's available for, a lot of startup companies. And that will, I think most will be eligible for this, but this is they call it cash flow assistance or cash boost in the announcements. But effectively what it is $100,000 either credit or refund to a company that's employing staff, and it's tied to the level of pay-as-you-go withholding within the business. There's a few other challenges, I guess. You do need to be carrying on a business and making sales of some description. So I've had one example where a company that's very early stage, employing staff, but hasn't actually made a single sale yet. They actually are not eligible for this because you do need to have made a sale over the last, year and a half at some point. So that could be a challenge for the odd company, but hopefully everyone here is making a couple of sales. Aggregated turnover under 50 million and have to employ staff. So the way that it sort of works is in two tranches, effectively. So the first one is a minimum of 10 grand up to a max of 50. And the way that it's calculated, if you lodge, if you pay your pay-as-you-go withholding to the ATO on a monthly basis, then whatever your withholding is for the March BAS, that amount times 3 up to a cap of 50K will be credited to your ATO account and refunded if you're in a refund. So I'd imagine most of the portfolio companies would have, at least withholding of, say 15 grand a month. And in that case, you would get the full 50K just about on that BAS. So essentially that's a cash benefit to the business of 50K that will come through once you lodge your March BAS. So that one, and you don't have to do anything about that. You don't have to apply, you just have to lodge your BAS and it'll be calculated automatically, effectively. So that's probably the first part. And the second half of that is another 50K. And that one's paid equal to 100% of the pay-as-you-go withholding up to the max 50K over the June, July, August and September periods. So depending on, and it depends a bit on the timing, whether you're quarterly lodging or monthly lodgements. But for example, if you're monthly, when you lodge each of the June, July, August, September withholding, you'll get a 12.5 grand credit on each of those. So, and a minimum of 10 again there. So effectively, if you pay any staff, you'll get 20 in total minimum. But if you employ staff, depending on your level of withholding, you can get up to 100K in total spread over 2 different tranches. And I've just got a table here that you can sort of see as an example. So this is handy. If I send around the slides later, you can have a look at it, compare where you sort of fit in. But for example, if you're monthly, so this is for monthly pay-as-you-go withholders, say example 3 for it's probably the easiest just to have a look at. They have 12.5 grand a month in withholding on their wages. So for the March quarter, effectively, you get equal to 3 times that, which is the 37,500. Then for April, you'll get the balance of the 50K, basically. So you get that full 50K for the first sort of tranche. Then nothing in May and June. And then for when you lodge the June BAS, for the June, July, August, September periods, then you'll also get the second tranche of the 12.5 grand per month. So you'll see there, effectively for someone who's got 12.5 grand in withholding per month, they end up with the full 100K spread over the different periods. As it drops below 12.5 or below 10, you'll see there that, example 4, they won't get the full amount, but they still get some. And then the last one, even if your withholding is quite small, you'll still end up getting, a reasonable portion, at least the minimum, which is 20K there. And there's a few other examples here where if you're quarterly and stuff like that, which you can...
Before we move on, Cole, so just to reiterate, can you just...
Sorry, Stu, I lost you there.
So just before we move on, anyone sort of have any queries around this particular one? Because I think this is probably the material item that we've seen that's going to be an automatic, well, not an automatic boost, but seems to be quite a significant quantum and applicable to pretty much the majority of businesses. And so does anyone have any queries in particular how this works?
I mean, it's a bit tricky in terms of the timing, but I guess that at least as a backstop, you don't have to do anything for it. You'll just get it automatically. So, if it's important for your sort of month-to-month cash flow, then I'd go and work it out. But if, month-to-month cash flow is not as important, then at least you can sort of know that you're going to get the full amount effectively. So.
I had a question.
Sure.
So I'm assuming you lodge your BAS and pay it, and then the cash comes back, or do you lodge it and a credit is applied and you pay the balance?
Yep. So, I mean, good question. No, ideally, in theory, the credit will be applied and then you just pay the balance. It should be balance to pay, or you'll get it refunded. And the ATO have come out and said they'll do process the refunds quickly, is what they've said. So I'm not actually sure what it looks like. Like, I haven't actually lodged a March BAS yet, so I don't know what it looks like. But I presume you'll pay it, you'll lodge it, and then automatically in their system, the credit will be applied, and so you just pay the balance. Remaining. Yeah.
Thanks.
Okay. Yeah. So as Stu mentioned, that 100K is definitely the major item for a lot of startups. It does mean obviously that if I just go back. Where the you see there where the second tranche is spread over those months, that's on the basis that you're continuing to employ people for those months. So the theory is they're paying it over this period to encourage you to continue to keep employing staff. So that's just, you can't just obviously close the business down and then collect the last sort of 4 months worth of rebate there. So that's one of the major actual sort of cash benefits. Effectively, it comes through to the business as tax-free income. So there's no tax on the 100K, and it's an actual permanent sort of benefit to the company. The second one that some people utilise, and this I guess depends where you're at in terms of the funding capital raising cycle, but and this is more of an ATO support, and it's more temporary and cash flow benefit rather than sort of a long-term permanent cash benefit. So this is, the ATO has effectively come out and said they're providing some lenience just around varying instalments. So if you're paying tax, which maybe most of the companies are not, but if you're paying income tax, then you can vary instalments for the March quarter and also get back some instalments you paid for the September and December quarters. So that's one of the concessions they've made. The other one is effectively they're going free rein on deferral of payments. So if you've got any tax payments whatsoever at the moment, the ATO has effectively come out and said they will defer those payments by 4 months from the date that they were due. And so that includes BASs, GST, FBT, PAYG withholding, that sort of thing. So we've had a stack of clients already that are looking at their forward cash flow planning, and they might have a bit of cash now, but prefer to preserve the cash than otherwise. And so they're just looking at whatever ATO liabilities they have coming up and looking to defer that for a period of time. 4 months, interest-free. So effectively, the ATO's come out and said they're going to remit any interest and penalties incurred after 23rd of January. So you can and we've had a few cases where if there's been interest charged, even like well into the 2019 year, the ATO's remitted that as well. So they're being very lenient. So they're sort of effectively becoming the country's bank at the moment. So yeah, if you do have that, it is only a temporary thing, so you still have to pay the tax at some point. But you know, it might provide that sort of cash flow extension if you need that as well. So these ones, it won't be applied automatically there. So you have to actually call up or get your accountant to call up and apply. But so far it's been very quick. They just do it basically automatically over the phone. So.
Hey Cole, quick one on here. How have you been dealing with the ATO during this period, and have you found that they're sort of adequately sort of resourced to even pick up the phones and respond to startup inquiries? Or
yeah, I mean, I personally haven't called them, but in terms of the staff here, yeah, from what I hear, it's been pretty quick. So we're not sitting on the phone for hours just trying to get the stuff through. We call them up, they basically do it straight away. I guess the difference is before we'd call up for a payment arrangement or something, and they'd want to get all this extra information and it takes weeks to do it. Now they just do it immediately on the phone. So I think it's a lot quicker actually. So yeah, no, it hasn't been an issue so far. As tax agents, we probably get priority over, if you're calling up yourself on behalf of the company. But yeah, so far we haven't. And there is a number, I don't know if it's on here, but directly for this sort of concessions. But yeah, so far it's been pretty good.
That's good.
So that's from the ATO side of things. And yeah, I guess we'll just keep up to date around that because, they've provided the extension for 4 months, but I'd say as things progress, if things keep getting worse rather than better, that might push out a bit as well. This one here is just about some, funding, so debt funding effectively. That I guess is targeted at SMEs, but equally startups would be applicable for this as well, quite likely. And there's a few different varieties of this. So there's one that I'll go through now. There's another one that's been released just yesterday for Queensland companies. So very similar looking schemes, but they're different. So this one here, basically, if you're a business with turnover under 50 mil, effectively the government is providing a guarantee to lenders. So this one, you don't actually apply through the government, you actually have to go through the bank. And from what I've heard, the banks are just getting their head around this at the moment in terms of rolling out these sort of products. And so there's banks, but there's also non-bank, lenders out there that are starting to sort of work out how they're going to do this. So I spoke to Fund Squire the other day that do R&D lending, but they're looking to, potentially provide a product along these lines as well that's broader than just R&D. So it's really a case of talking to the banks and seeing what they have. But the structure is effectively saying the government provides a guarantee up to $1,000 loan, 3-year loan, 6-month no repayments, and effectively it's unsecured. So all of that makes complete sense. But then they've said it's subject to the lender's credit assessment process. So that part is something we don't really know the answer to yet, is, what sort of requirements or what are the banks going to look at when they're sort of assessing the credit worthiness of these loans, given their guarantee. So I don't really have any more answers on that just yet, but it's certainly something worth looking into if 250 grand is going to make a difference, I suppose. Pretty low interest.
So Cole, just sorry to interrupt. So it doesn't sound like any of your clients or anyone has really applied for this as yet. Is that fair to say?
Yeah, no, there's been a few that are starting to talk to their bank, but none that's actually gone through the process, so that we don't have enough information. And even the bankers that I know, they're still like working out what they're doing. So I reckon within a week or 2 weeks, this will be there'll be a lot more structure around this particular program.
Makes sense.
Yeah. So the other one, I might just quickly flick while we're on this same thing. So this is the other program that was just released yesterday. So my knowledge is fairly sketchy because I only just looked at it this morning. But it's a very similar scheme. This one's provided by the Queensland government, so directly by the government, this one, as opposed to through the banks. 500 million, not sure how far that'll go, but basically it's the same thing. So providing loans up to a maximum of 250 grand. And this one is based on a maximum of 50% of an eligible entity's annual wage. And you'll see there that that's an average over the 2018 and 2019 financial years. And it's basically salaries plus super, plus some other cases where there's directors not drawing a wage. So yeah, so if you've got a wage bill on average of 500 grand, sorry, per year, then you'd be eligible for the maximum 250,000. And you can effectively use that loan for just general working capital. So paying wages, creditors, rent rates, all that sort of stuff. You can't refinance other loans effectively. The criteria is fairly basic. So you need to have an ABN. You need to have at least somebody working in Queensland. You need to have operated since 1 July 2017. So that's probably potentially that could exclude some companies. I don't know exactly what this means, but having suffered a loss of income as a result. So I guess that would be the same thing. You probably need to have income and be able to demonstrate somehow that this is going to impact you. It shouldn't be too difficult. And be able to demonstrate that, you know, you would be able to service the loan under normal conditions, and, you know, the business is viable. So I think if you're a startup that's actually got revenue and, you know, maybe not cash flow positive, but at least got revenue that's somewhat meaningful, then I think this potentially will help as well. And you'll see here, just in terms of security, so that's probably something to consider in terms of the shareholders agreements and stuff like that. But loans of 100K, you don't need any security. Over 100K, they will have a general security agreement. So basically, the government will take a charge over the shares in the company or over the company itself. So that just need to watch out because shareholders agreements might not allow that without board sign off, quite likely. I don't know, Stu, if that would be standard, but it probably is. If you can get it, then it's a pretty good deal. So 10 years, no repayments, no interest for the first year, then interest only after that, and then P&I, interest rate of 2.5%. So that's, yeah, it's a pretty cracking unsecured loan if you can get it and it's worthwhile. So,
cool. When was that one announced? Because I think we had a look at this on a practical nature, I think, and then even an application sort of form, and it almost just says like input your email, name, etc., and we'll come back to you. And I haven't done anything further. So, do you know if there's an actual?
Yeah, no, there is. Yeah, so all the information, like the detail information and application process, just came out yesterday.
Okay.
Yeah. And it's not on this sheet that I've got here, but it does tell you what you need to apply. So, somewhere in here. Yeah, so just, I don't know if you can see that, but
Cole, we're still stuck on we're still stuck on the old slide for the SME guarantee scheme. So I'm not sure.
Oh, you are? Okay.
Yeah.
That's all right. I'll see if I can jump off that for a second. Yeah, so I'll, yeah, so in terms of the documents, I can flick around to some other information on this one, Stu, so you can pass around anyway, which might be easier. But essentially, you need to provide, you know, financial statements for the last 2 years, tax returns, bank account balances, ATO statements, lists of debtors and creditors, and some ID, basically. And yeah, the website and the link and stuff, which I can send around, has sort of got some information about that now. So
that'll be great. Thank you. And we'll circulate all these links and whatever material Cole's happy to share after the call.
Yeah.
Will you circulate to everybody on the call?
Yes, as long as you've sort of signed up and we've got your email, we'll circulate it. So, yep.
Cool.
Yeah. Yeah, so they're the sort of two, loan type schemes. The two main ones anyway at the moment. One through the banks, one through the Queensland government. Some stuff here about apprentices. It's probably not that likely. There's a few other things here that they've come out with, which is a bit odd because, you know, not many companies have got spare cash in this sort of scenario, but, you know, they have added increased instant asset write-offs. So if you're buying assets like plant and equipment, things like that, you can write it off. It would cost less than 150,000 up to 30 June this year. I haven't really seen too many people take advantage of that one. Same thing, increasing depreciation. These are mostly to do with, so the other ones that probably is relevant is the state-based payroll tax concessions. So Queensland came out just earlier this week to follow suit with New South Wales and Victoria, basically to provide some, you know, rebates and holiday on payroll tax payments. So for Queensland-based employers that have $6.5 million or less in Australian taxable wages, they will provide a refund of the November and December payroll tax, and also no payroll tax for 3 months, which I think is January, February, March, over 3 months. So effectively 5 months you won't pay any payroll tax, and if you already paid it, you'll get a refund for some of those months, depending on when you pay it. And then in addition to that, you can also defer the payment of further payroll tax for the whole 2020 calendar year. So you still need to pay the balance, but you can defer the rest as well from a cash flow point of view. So this one, you do need to...
Hey, Cole,
yeah.
just a quick question there, kind of stop you there. So
yeah,
the minimum for people is basically if they've got, I think it's about 1.3 million in wages, is that correct? And so this might not apply for some startups, but will apply for ones who have an annual wage bill of that number, is that right?
Over 1.3, yeah, that's right. Yep, yeah. So if you're under 1.3 million wages, then you won't pay payroll tax anyway, so that's fine. If you're over 1.3 but above, and over 1.3 but under 6.5, then this would apply. And there's similar things in New South Wales and Victoria, and their threshold, like if you have the odd employee down there, their threshold is much lower. It's about 650 or 750, I think it is, between the two of them. So yeah, it's much lower there. But yeah, no, you're right. And this one you have to actually apply for. So you don't, it's not automatic. So you do need to apply for the refund and the concession for the extra 3 months. So you should, whoever lodges the payroll tax for the company should have already got an email by now with some links and stuff to go and do that. So that is probably the main thing. There's not much about rent at the moment, but they're starting to come out with some stuff about that. And this is the details for that loan, which, yeah, at the time we did the slides, we didn't have any info, but there's a bit more info about it now. So.
Right. So is that the general consensus is hopefully there will be some relief in relation to rent, and so that you don't sort of, I guess, breach your conditions with your landlord?
I mean, that's sort of what they've said, but I don't think that's been decided yet on the landlord sort of side of things. So and rent, but yeah, I feel like it will, but it might. My gut feel is that it'll most likely be based on, you know, either residential rent to start with or retail shop lease, you know, rent, because they're covered by separate legislation. I think general commercial leasing, my gut feel is that they won't release any specifics on that. They might just say landlords to be kind, but I don't think they'll provide any particular concessions on just general commercial leases.
Perfect. So it looks like the slides are done. Is that right?
Yeah, I mean, there's a bunch more in there about just general sort of other issues, but I think they're the main ones that apply. So I think, yeah.
Okay.
If I can,
we might open up to the floor if that's all right. Ask some questions.
Yep. If there's any, while waiting, I'll just see if I can share this.
Well, I might kick off.
Stu, sorry, just before you start, this is the, can you see that now, the website?
Yes.
Yeah,
yep.
So that's the, this is the Queensland loan, the $250,000 loan scheme. So it's the Queensland Rural and Industry Development Authorities, the organisation that's managing it. And so, yeah, you can sort of find that on here, on their page. It's got the
Cole Stephen here. We've also got another company in the line with John, I think, is representative of. They're not quite your standard tech startup. They do gas, minery, small sheet metal work. I think you've met reliable maintenance before, just to give you more perspective.
Yeah. You just cut out a bit at the start there, Steve. So I'm not sure if there was a question in there or not.
Oh no, so it was just like, because I think you glossed over things like apprentices and other bits and pieces. We actually have a more traditional business on the call as well, I suppose.
Yeah. Okay. Yeah. So yeah, I think yeah, and there's a few things in those slides just about yeah, like things like apprentices and other things, which, you know, for more traditional businesses would definitely be applicable. So I can certainly yeah, circulate them around to cover off on that. I mean, broadly with apprentices, effectively you just get half. You can get half, apply to get half of their wage costs effectively rebated up to a maximum of 21,000, I think it is, for them. Yeah.
Sounds good. I had a question around, I was reading some information about monthly GST. Also, you're getting quicker refunds there. Is there, I'm not sure if you have any material or views on that, if it's worth it. Obviously, it just depends on what type of product you're selling.
Yeah, that's right. So if you do generally get a big GST refund, you can go and change to monthly and get that back. So you lodge monthly instead of quarterly, so you get the refund back quicker. To be honest, you can do that anytime anyway. So I don't think that would apply to many. Property developers are the only ones really that would lodge monthly on purpose because they, you know, want to get their GST back along the way through the project. But yeah, for most other companies, if you're quarterly, the admin's probably better to leave quarterly rather than increase that monthly unless you have to, or you are getting big GST refunds, you want them back quicker.
Sure. Does anyone have any questions at this point?
No.
I might kick off with one while people are. John, do you want to just jump on the line? You can actually just ask the question. I might just kick off just in general, Cole. So what are you sort of seeing with your general clients? It's probably a separate piece, but I know you work with a lot of companies in the early stage. You know, what are you advising, I guess, your clients in terms of conserving cash? I guess this is a good piece, and I think that that goes a long way. Obviously, the government stimulus side of things, but are you having a look at any other options? And when you're talking through with your customers?
Yeah, I mean, so like a good example of a client I just had a chat with yesterday. They have an office in the US and also one here. And they're in a revenue generating stage. So, you know, cash flow positive, I guess, generally. So for them, what we're doing together with them at the moment is pulling together a refreshed sort of cash flow forecast for the next 12 months, basically. Working out, they've sort of estimated already their revenue is going to take a minimum $1.5 million hit from this, based on what they do. And so that, but then on the flip side, they feel like their product can help capitalize on some of the changes in work practices, I guess, that's coming out of it as well. So what we're doing with them is basically working through that cash flow, building in any of these concessions and deferrals and all that sort of pieces, effectively to try and maximize the ability for them to keep on their dev team running sort of full capacity, so they can sort of launch these new products, come July, August, September or something like that, to, as quick as they can. So I guess it's sort of looking at the overall strategy and going, well, is the strategy just to, shut up shop for a while, or is there things that we can do to capitalize on it, on changing practices and stuff like that. I noticed Jean was on the call, from Drawboard, they sort of in that same boat, can they capitalize on the changing work practices, I guess. So it's a matter of how can you maximize that without running out of cash in the meantime. The other one, which I think, you've probably talked about as well, Stu and Steve, is that, for startups, they probably don't necessarily have cash flow issues now because they're, funded from equity capital. But, that might change in 18 months' time when, venture funds and stuff are raising less money because there's just less money in the markets. Those funds have still got money to deploy now, but they may not in 18 months' time. So, a bit of forward planning around what that means in terms of raising capital. Do you raise a 12-month runway or do you raise a 2-year runway? Maybe start thinking about those sorts of things.
Yeah, perfect. Any particular queries on the call whilst you've got Cole here?
Hey, Cole, Ryan from Capiche. Can you hear me okay?
Yeah.
Quick question for you, and you might not have an obvious or a clear answer. That's fine, but I just thought I'd ask. Any insight do you think you can give around thinking strategically about when the circumstances might be right for applying for that state government $250,000 loan? Like what the thought process might be and whether to do it or not to do it?
Yeah, I mean, to be honest, the ones that I've heard of recent times, it's been getting now while it's still there, getting quick. It's 500 million, seems like a lot. That could probably get spent very fast. So, if you meet the criteria, the interest is, well, there's effectively no interest for the next 12 months. And then it's really low interest rate after that. So, I'd probably get in and do it if it was me.
Okay, so kind of just like a better to have it than not to have it type of mindset.
Yeah, I mean, and this, this applies if you want money from a bank, if you want money from an investor. It's a lot easier to get when you don't need it. If you're on your last week's worth of cash for wages and you try and raise money from a bank or from an investor, it's very, very difficult. But if you've got enough runway, then it's a lot easier. So I'd probably get in early and do it sooner rather than later, rather than wait until July or August when you realise that it's not getting any better and the 500 million's been already divvied out.
Awesome, thank you.
Anyone else?
Who's that? Sorry.
Sorry, you go, Steve.
I was going to put a bit of a PSA in. Whilst we're talking about potential grant and loan sources here, we also put out a video recently with Ash Tipley from Mills Oakley about what you can do with your various contracts for commitments you may have, and also what other people may be able to do to you with respect to their contracts. So just have a look on LinkedIn or Facebook and you'll find a little bit about
some of the issues around that, which sort of dovetail into this. In that ash also goes into the COD atmosphere that may be about to land on us. Cole briefly flipped over one of the slides there, which is the 6-month insolvency relief. That's not doing a very good job describing it. But as a result, people are going to be going to like 1 to 2 week terms, if not COD. So there's other issues for your business here, right?
Yeah, definitely. And I haven't touched on any employment related things because I have no idea, to be honest. But that is the other question we're getting heaps of from clients as well. And so, it's a few HR lawyers and stuff that we've sort of asked them on to. But that's the other one we're getting heaps of is what does this mean? If we do need to downsize, how do we do it? How do we manage our workforce? All those things. So there's heaps of complicated issues on that front. It's just beyond me. Expertise, I guess. But yeah, like the same as Steve's they're saying about the general insolvency rules and terms and contracts and stuff. There's a lot of complications in that's going to start coming up. And the other thing, just on a, not sure how it applies, but I think if you're in the hospitality, events, tourism space, then it's pretty immediate impact right now. But my personal thought is for most other businesses, the actual impact's not now. It's going to be in, June, July, August, September, when the work's dried up that people are currently doing, and there hasn't been enough sort of, activity to stimulate more. So it's more like you can still deliver on the contracts you've got now, or sign up maybe a new customer if you're lucky. But come July, August, you won't have signed up any customers for the last 4 months. So, how do you manage that? I think is going to be the biggest challenge, not right now for a lot of companies anyway.
Cole, it's Margot. I was just going to say also, there's obviously a lot of costs are being deferred. There's only really 2 permanent relief measures here, which is the PAYG withholding and the payroll tax. And the rest is really deferrals. And I mean, do we even know how they're going to set the interest rate on the loans in a year's time?
Some of the loans, yes, they've sort of come out and said that. But yeah, like say ATO deferrals, they've provided sort of a concessionary interest rate on any sort of, well, no interest at the moment, but even after that, like a lower interest rate. But yeah, at some point they're going to start charging interest. And it is just a deferral. So you just got to keep that in mind.
Any other queries?
Well, another one there as well. I'm not too sure the actual status of the actual group that's on the call here, is that the ATO can be used as a source of funding before this, and in general, not that I'm promoting this, but search the ATO site for ATO payment plans. They're actually quite a flexible lender. Maybe Cole wants to do 30 seconds on that.
Yeah, they are definitely. I would say they're the number one lender to our clients because they are quite flexible. Normally their interest rate is, on the high side generally, but at the moment it's very low. And the interest that you pay to the ATO is taxable anyway as well. But yeah, there is always that option with the ATO. It is sort of structured, and you do need to sort of still comply with a lot of things. But yeah, it is sort of worthwhile, using that as an option as well. One other thing that I didn't mention is, if anybody's planning to claim R&D for FY19, but they haven't just because they haven't got around to it, the R&D due date has been extended by, I think, a year. So it's normally 30 April, but that's been extended by a year. So if you were planning to do FY19, you've got a bit more time, obviously.
A quick question on that, Cole. Do you foresee that R&D sort of having less of a magnifying glass on it? I know there was, I guess, a review underway. Has that kind of shifted given the environment?
I'd say it probably has. They haven't come out and said anything about it, but yeah, I'd say it has, at least for FY19 and maybe FY20, depending on how it goes. But then I'd say that it'll be back again after that.
Okay.
Yeah.
Any further questions?
Is there any incentives in export market other than the standard export market development grant or that type of thing? Is there any further changes in that at all this time?
Not that I know of, no. So I think it's still basically the same. I haven't, yeah, albeit you would think exporters have been very badly impacted or will be. I haven't seen anything specifically around that yet. So it's quite possible they will come out with something, but I haven't seen it. The other thing, I didn't quite mention it before, but the client I was talking to yesterday that's got an office in the US, they've obviously come out a day or two ago with a $2 trillion stimulus package as well. I don't know the detail, but you need to sort of have a look at that as well in relation to your US operations, because they might equally be eligible for that as well.
Is there any links to anything around that? Do you know of any contacts we can utilise?
I can ask a few contacts to see what they've seen, and if they've got any handy links or information, then I'll pass it on.
That would be great, because I'm from Point Duty, so we do have offices in the US, obviously, so we are affected by both.
Yeah. Okay.
Ask away. Any further questions?
All good.
All right.
But yeah,
All right.
I'll send through the stuff to Stu, and then if there's any other questions, I think my email's on there, so just shoot us an email or something. And
I just want to say, yeah, look, before Stu pops in, thank you very much, Cole. Pictures has always been a fantastic supporter of enterprise in Brisbane, and Cole especially. So, please reach out and for some pictures for help if you need to.
Cheers.
Yeah, no, fantastic. Thanks so much, Cole. I know everyone's sort of saying thanks in the chat, but I think probably the material points for me is the PAYG. So that's between 20K and 100K, which is automatic with fantastic benefit. There's payroll tax if you do pay it. I think that's a significant benefit, obviously. Government for Queensland-based startups, and then it feels like the banks they're still trying to navigate how getting through their credit assessment. So I'm not sure if that one is as applicable in the short term. And the last point is probably around the ATO being relatively lenient at this time and deferral. So there's a good opportunity potentially there if you are paying a level of tax, which I'm not sure how many companies are, but there are some on the call that are doing so. So thanks very much, mate. I really appreciate it. We'll get those links from you and the pitch deck and stuff and share it around to the general group and circulate to the portfolio. But thanks so much for your support as always.
No worries.
Thanks
Cheers.
very much. We'll wrap up at this point.
Okay, thanks. Cheers. See ya. Bye.
Yep.
Thanks, team.
Thanks.
You guys.